Hey traders, Steven Kowitzel here with thetradersplan.com. Today I want to talk about commodities, and we're going to go through several charts, several opportunities. I think there is commodities could be a second half of 2017 play. So we're going to go through lots of charts. I'm going to show you the evidence that I'm seeing why that could come true. We're already making money in commodities, but continue to look for setups. Before we get started, if you are watching this on a computer, feel free to make it a full screen so that way you can get the full effects. So I just recommend full screen. Before we talk about commodities, I have to show a chart of the dollar. And the reason why the dollar is so important is because the dollar and commodities are over time inversely correlated. So when the dollar goes down, commodities go up and vice versa. Well, the dollar has just been in a sell-off downtrend for quite some time now, really since the beginning of 2017. It was really strong late last year and now is in a downtrend. It seems to be approaching or is around support. I feel like we could get a decent bounce in the dollar, just kind of an oversold bounce. You can see that the moving averages is crossed, so there's your death cross. So we're in a bear market territory, but bear markets have bounces, so if the dollar bounces like I think it will, that will give commodities an opportunity to pull back, and that is really probably where you want to enter a lot of these commodities. Like we'll look at gold and other things, but at the end of the day, sometimes just because the dollar bounces, sometimes commodities will continue to go higher. It's not a perfect correlation, so you need to pay attention to the individual commodities, but where we're at with the dollar is very important. We could get a bounce, which could pull back commodities for entries. I want to start with this chart. Actually, I want to start with the GDX chart, right? Everybody loves gold miners. So this is GDX, and if we look at it up here, this is GLD. So this is the gold shares, the Spider Gold shares. And if you look at just a simple chart, the downtrend, we had a nice little head and shoulders and then a breakout. So you had a double breakout. You had a breakout of the head and shoulders, and you had a breakout of the downtrend. Okay, so you had a double breakout in GLD simultaneously. That's bullish. And if we go down here to GDX, the gold miners, you can see that the gold miners were really strong the first half of the year and then really sold off. And, have really been pinballing around, and it hit this trend line resistance 1, 2, 3 times and kept getting pushed back. So the trend line, you need to respect it the more times it's touched. Well, then about a couple months ago, it punched through, came down, tested the trend line, and now is really starting to show some strength. So, if GDX pulls back, which it will, it'll cool off for a couple weeks before it probably resumes its advance, what I'm assuming. That is a good time to consider getting on board or taking a position. It's looking really strong. This trend line is strong, so you need to respect it. And so we're continuing to look for opportunities. But right now, the evidence in gold, GLD, with a double breakout, and then the evidence with GDX, how it broke out of a downtrend. And this downtrend is last 12 months, so it's a serious downtrend. This breakout needs to be respected, and the fact that it's acting really strong, waiting for a pullback makes sense to consider for your portfolio. Now, I learned this from Greg Schnell off of stockcharts.com. A little trick. What they all do is they compare GDX to GLD, the relative ratio. And what that means is when you compare the relative ratio, when the line is going up, it means GDX is outperforming gold. It means the miners is outperforming the metals. And that's really what you want to confirm a bullish sentiment. You want the miners to outperform the metals. And when the relative ratio is going down, that means that the miners are underperforming the metal, means you have more of a bearish sentiment, okay? So we also, in addition, had a breakout of this relative ratio in the middle of August, right? So miners broke out. It says about to, but miners did break out relative to gold. That means from the last 12-month trend line, miners are now starting to outperform the metal. So more evidence suggesting that this gold trade needs to be respected, and it could, since this is a 12-month downtrend, it could be a really, really nice move. And then down here in this pane, I have GDX, the miners versus the junior miners. So you can see right here, now you want the juniors to outperform the miners because, I mean, that just shows that people are willing to take more risk. And you can see right here that that happened way back in April. So you had the junior miners breaking out relative to the bigger miners, the Freeport McMoran and things like that. So again, just more evidence that's pointing to this gold trade. There could be something to it, and you really need to consider it. Now I'm also seeing a collective evidence with other commodities, right, that you should consider and just kind of really keep on your watch list. Now it's up to you whether you decide to trade these. Now, whether you're a member, I will obviously send you the timely picks, but let's look at copper, because it's hard to talk about commodities without talking about copper because it's just been so strong. So COPX, the copper miners, you can see that, I mean, it really just got slaughtered. Now this is a weekly chart I'm looking at. It got slaughtered for a long time, and then it broke out relative to the S&P 500. So that means the copper miners were beating the market, and they beat the market for quite some time, and then they fell into another correction and then broke out again right about this time. So it broke out of the downtrend, broke out of the relative, and you can see right here these miners made this monster move from 8 to 24, right? So it tripled and then pulled back and really settled into this 38% retracement. So the fib retracement zone, 38% right here. So from here to here, and then the pullback is 38%. So really settled nicely into that support group. And it is a zone. It's not an exact science. It's just to give you an idea of what the measured move could potentially be. And then built a very large and deep cup with handle. And then you have the handle right here. And then you have the breakout. So copper miners are incredibly, incredibly strong. You have, the pullback, the test, the breakout relative to the S&P 500, and it is showing strength. Now, it went from 19 to 27, so for me to consider this, I probably would need a little bit of a deeper of a pullback just because it's pretty extended right now. But this does appear to be one of the strongest, if not the strongest, commodity out there. So when you're entering a commodity bull market, you definitely want to be in some of the strongest commodities because, boy, they can really, really run. And we actually, the newsletter actually made quite a bit of money on this last year, made about a 50% trade from probably around this point somewhere in here on COPX, and then I sold it really just perfectly, but I made a mistake of not getting back into it, so that was my mistake. So another interesting trade is uranium. That's global X URA. So you can see it broke out of a downtrend relative to the S&P 500. Now this is really volatile. This ETF is really volatile. And again, we made some money off this last year because we bought it right around here, and then we sold half into strength, and then we sold half as it broke the 50-day moving average. And then it's really been just ugly ever since, right? From 19 to 12. Well, and then it firmed up and it made a nice little move from $12 to $14 and pulled back. And I have this Fibonacci retracement on it. You can see it pulled back and settled into this 61% zone. And it's creating a little cup with handle. Now, this is a lopsided cup with handle and it's kind of ugly. But look at how URA pushed up against the 200-day, came back. It's kind of firming up around that 50-day moving average. So if it takes a nice little jump from here, that's probably something you would want to consider getting on board because it's a pretty bullish setup in my opinion. So now we're looking at Spider Metals and Mining ETF XME, and this is something that the subscribers already traded, but I just wanted to kind of show it to you. So you have more commodities. This is a combination of copper and steel. But again, you have more commodities breaking out of a relative downtrend, broke out of this downtrend channel, popped, came back, settled into this breakout zone right here, firmed up, and then just went really straight up. Now, I think this is extended, so I'm not telling you to buy here, but based on the strength and the outperformance of the S&P 500, I think a pullback, you should really respect it. So, I mean, we bought some here, we sold some up here for a nice little trade. I don't know what this long candle is today, but you can see when I decided to take this trade. It was coming out of an oversold RSI. So it was in a bullish uptrend. It came out of really a double bottom RSI, which is my favorite. I'll save that for another video. But if you take one leg down, it gets oversold, and then it can't get back up to the 50, and you take another leg down, that's probably your better entry than just buying a quick oversold, because a lot of times they'll come down and then they'll just roll over again to shake the final people out. So you always want to buy the shakeout, okay? So we bought right here as it was coming out. As it was settling into this zone, it firmed up around the 200-day moving average. But again, all the evidence to me is showing that this is something you want to have on your watch list, assuming a pullback, because it went straight up. Just more commodities are looking like bullish setups. Okay, so UNG, natural gas. Now, if you can successfully make money off UNG, teach me, because this is, and I say that because it is just incredibly sloppy. But, you know, I'm also looking for the relative breakout to the S&P 500. So it could be significantly oversold, and now I'm drawing these trend lines down here. So if it breaks out, you need to respect it. If it breaks down, you need to respect that. But you can draw, I could probably draw a nice little cup right here showing the bottom is trying to be put in, it's trying to round out. And I'm looking at this because I'm looking at all the other commodities that are acting bullish too. And if this is near breakout relative to the S&P 500, and if this is close to breaking out relative to, you know, just a downtrend line, again, that's something that you want to respect and potentially get on board. So this is something, all these commodities are just, they're looking right. They're looking for a run. Now, of course, you know, when the dollar rallies, all these commodities could pull back, you know, and just shake everybody out for one final shakeout and just make everybody say, I don't want to get on board with commodities. They look ugly, and then just take off, you know, in a big commodity bull market. So, you know, this is not something you want to buy and hold. I think commodities are something you definitely want to keep an eye on, or use the death cross or the golden cross in your decision making. Last but not least, oil. So you have, obviously, you know, oil kind of topped around 50, a little bit over $50, and then it just really rolled over. So you have this XES ETF, the oil and gas equipment sector, really corrected 47%. I mean, that's a pretty good correction. Now I want to come down here to show you really why I bought some and sold some for a quick swing trade, and why I did that and how I came across that trade. One, I was looking at this is just a really hard move, and I saw an up day and I was like, okay, we're due for an oversold bounce. The selling is looking exhausted. So I looked at the RSI and I saw RSI 5 was coming out of oversold zone. RSI 14 was coming out of oversold zone. And the West Texas oil was in a potential support zone. So there was enough evidence here to say, okay, I think an oversold bounce, a swing trade, is worth taking a stab based on the evidence that I'm seeing. And it worked out to be right. Now, does this just take out the lows and roll over, or does this create this consolidation sideways pattern and then, you know, be a nice second half trade? At this point, I don't know. But I just wanted to show you this to show you more evidence of more potential commodities that are really moving. Now, this particular commodity could have a lot to do with the storms. You know, the storm in Texas, the potential storm this weekend, Irma. So this could be a little bit, nat gas could be a little bit more storm related. But I thought it was very important to create this video just to show you the evidence on how I think that we're trading commodities, and how I think commodities more could set up to be a second half trade. And these are just thoughts that you want to consider and keep a part of your watch list, and don't sleep on the dollar, because it could bounce and it could pull all these commodities back and just scare everybody, and then just go back into a downtrend and the commodities could roar higher.